Well, hello traders, and welcome to this week's forecast. We start off at Forex Factory just to get a view of the key data releases that are coming out next week. Next week is data heavy. We have news on CPI data. We have the Fed coming out. We have the Bank of Japan interest rate decision coming out. So it's one interesting week that might affect the markets. Expect a lot of choppiness next week as the market consumes whatever information that will be coming out from the central banks. Yeah. So starting off at Forex Factory, we can see we have for the Chinese yen, we have the industrial production that is coming out on Monday. Chinese data usually affects Aussie, the Aussie pair, because the Aussie exports a lot of their minerals to the China. So whatever data that impacts the Chinese yen and the overall macroeconomic environment in China will always impact the Aussie yen. So it's important to always keep an eye on the Chinese data. We have the Bank of Japan coming out with their policy rate decision. The market is already hinting to an end of the negative interest rate cycle. So it'll be interesting to see what comes out. There's actually this interesting phenomenon in the market that is called buy the rumor, sell the fact. So I think for a while now, the market has been pricing in an end of the negative interest rate cycle. And I think we did see the Japanese yen gain for a while. I think that was the other week or last week. So it'll be interesting to see how the market reacts after the fact, after now the policy rate decision has been made. So we'll be looking out for that information this week. The Aussie, we have the cash rate decision and the RBA statement. So we have very key data releases that are coming out next week. We have CPA data for the card. We have CPI for pound. It'll be interesting to just have a look at what the data prints. And more importantly, we have the FOMC coming out on Wednesday. It is really, really important to keep out an eye on the FOMC because the FOMC statements, also key data releases like CPI, drive long-term interest rate decisions. So it will be interesting to see if the market or the Fed, that is, if they'll be dovish or hawkish this time around. Last time they did give an indication that they'll delay cutting rates for a while. So it will be interesting to see what comes out this week. We also have rate decisions coming out for the Swiss. We also have PMI data for the pound, and I think the Fed is also speaking on Friday. Yes, the Fed chair Jerome Powell will be speaking on Friday. So this is just a summary of some of the key data releases that we'll be looking forward to come next week. They heavily impact order flow, especially if you're an intraday trader. You'll see a lot of volatility during these data releases. My rule is do not place a trade 3 to 5 hours before a key data release. It's always important for you to wait after the data release, wait for the market to consume the information. Just give it an hour or two after the release, then watch how price patterns print on the chart after the data release. Then you can continue with your trading. There's no point of risking your capital. But this is a week to watch out for. So let's deep dive into the charts to see what I'll be looking at for this coming week. Before we start, I've actually done a video on some of the websites that I use for my fundamental analysis and also to check interest rates. Check it out here. It will be at the top right of your screen. We start off our analysis with the gold chart. What you see here is gold creating an all-time high by breaking out of a range that has been in place since the year 2020. Gold is one of the pairs that is giving me a good price action signal for this coming weekend, following months to come. And I'd like to take you through how I'll analyze such a chart. What you see here is a range, clearly defined range, with a key resistance coming in at 2070 and support coming in around 1680 region. And you can see, let me grab a pen tool. You can see 2070, this is the first test. 2070, second test. 2070, third test. 2070, fourth test. And to take you through how I'd analyze these tests. So you see the first test went all the way to 1680, the support area, took our Leah 1 year to come back to this level, and I want to take you through this second test. I look at the second test, you can see a pin bar. Pin bar, strong pin bar. If you see a pin bar with such a long wick compared to the body, it shows you how much momentum the bulls lost and how much momentum the bears gained. And these, you can use this to stress the importance or show you the importance of a resistance level. And you can see immediately that pin bar was formed. What followed was a bearish order flow all the way to the support around 1680. How do you trade such tests of a key level? Ideally, the first test, what I mean the first test, a high has been made, then this is the first time you're testing this high, is usually a good place to place a sell. See, this is the first time it was created. The second time, the first time we test that level, just put a sell around that level. It might work, let's say 70% of the time, but 70% of the time, a 70% win rate of such an idea is not bad. It means on your bottom line, your P&L will be good, and you can, especially when it's forming on the higher charts like the weekly and the monthly, is actually strong because it has taken time to actually form. See, this is a weekly candle. Those are a lot of bars if you go into the intraday level, and it's such an important area for the market. So you just sell because it's an all-time high. If you sell here, you'll have made out a nice position play and made good money from that level. Even from intraday level, you would have seen trends in this down rally that you'll have taken advantage of. Came to the third time, tested the level, but I want you to look at the reaction of the third time, comparing it to the first two reactions. The third time we came here, the sell-off was not as much as the first two times that we tested the level. And this is your first evidence that this level might not be as strong as it is, that it's becoming weaker, and that the bulls are becoming stronger, and that the bulls are actually willing to buy gold at much higher levels than before because they believe that it's bullish long term and they want to, and they're ready to take positions at higher prices. And you can see we did the fourth test, and I want you to look carefully at the fourth test. In the fourth test, this was a bar that had closed above. So this is a premature breakout. Why? Because you closed above and immediately closed below. But once you look at follow-up price action, we did not see a continuation of this sell-off. This shows you how strong bulls are. If you have a sell trade and you do not see a continuation of this bearish order flow, it's time to get out. Why? It's time to get out because bears, or rather potential bears who are on the sides waiting for continuation of this pattern, once they see this, they no longer want to get in. And if I'm a bull, basically I'm a contrarian in this particular scenario, and I see that sellers are not willing to continue this sell-off, what does that mean for me? It means it's an opportunity for me to get in. So if you already have a sell trade in, you are trapped, and the easiest way out is to close that position and monitor the market. Because we had an intraday, an intermediate level here around 2000, and it held off this bear rally, and price has maintained above the 2000 level since. And I want you to see, we did have some bit of consolidation. You can see the small bodied candles, and what followed? A strong close above 2070, gold making an all-time high. So how will I trade this pair moving forward? I would want to see price retrace to 2070, where I'll put in a buy trade and target 2200, because as it is right now, 2200 marked here as 2196, but I'd put it around 2200 because 2200 is a big figure. 2200, a retrace to 2200 will make for a good trade. You can probably now go to the daily time frame. I think price is fractal. You can see whatever we've seen in the weekly is what you can see on the daily. On the daily, I want you to concentrate on this rally. What do you see? Price is parabolic. In this entire rally that started on 14th February, we only have 1, 2, 3 red candles. The rest are bullish. And I want you to look at the steepness of this bullish rally. It's steep. Ideally, sustainable trends that hold for the long term, you want to see a 45-degree angle. You want to see a chart flowing from the left side of your of your chart to the right side in a 45-degree manner. But once you see this one becoming vertical, basically becoming 90 degrees, it's parabolic and it's time to probably close some of your position if you're long and manage your trade. Why? Because price will have to cool off. You can see the distance of these candles compared to the 20 EMA. Ideally, at some point, price has to catch up with the 20 EMA. And for me, I know from experience that price usually goes back to a breakout level before it continues the rally. So I'd want to see price come back to the 2070 region. So for me, I forecast a retracement to the 2070 region. We can already start seeing the bears coming into the market. And if we deep dive into the H4, what do you see? We can call it a continuation pattern or a reversal pattern depending on how price action plays out this week. So this is a right angled this is a triangle pattern. We can see the lower highs and you can see intermediate levels. We can see this region around 2150 and this region around 2170, 2175. For this coming week, if price closes above 2175, you can go long intraday targeting 2200. But if price breaks and holds below this support line around 2150, remember support and resistance is a zone. There's a zone I can say between 2154 and 2150. You can look to go short, targeting a move towards 2070, and that will make for a very good R trade. And I want to take you through a trade that I took during this week. I trade the daily, but sometimes if I see a good move on the intraday, I can take. I want you to look at these candles. What do you see? These candles are forming around, you can see the Asian session where we have very low liquidity in the market. I want you to see what follows. This during the London session. Look at this bar. This is the H4. So we have a low liquidity state, then a breakout from that low liquidity state. So this low liquidity state, you can see price was ping-ponging around a certain range of price, meaning at this period of time, there was consensus in the market between buyers and sellers as to the price. Then what happens? Sellers just break off. At this point, I usually look for price to come back to the breakout area and I look for a short trade targeting this swing area. And I did take that trade during the week. The trade looks something like this. I targeted, I think my entry was around this. Then I did put my stop loss just above this week and I targeted a move towards this level. And it did give me a nice 2.3R. So yeah, that's one of the techniques I use in trading. You probably research and look at charts and see if it makes sense. But ideally, if you see a low liquidity state, then a breakout, target for price to go back to the breakout level and target this previous swing, this newly created swing. So that's more of short-term trading. But now if price breaks this intraday support area, it will give me more evidence that price wants to go short for a while. So for such a trade, I'll probably look to go short, fall in a retracement to that level. My stop loss will be above that level. And now this one I can target a much key swing point around 2070. Remember I've mentioned before, price moves from key area to key area. So most likely the next bull drive will probably be coming from the 2070 region. But again, I react to price. This might actually turn out to be a continuation pattern and see price close above 2175 and eventually close above 2200. So my price action, my interpretation of price will be based off what the chart prints, and the trades I take will be based off what the chart gives me. Yeah, I can't force the chart to give me what I want. I react to what the chart gives me. So if it breaks above 2175, I go long. Breaks below 2150, I go short. And that's my overview of the gold chart for this coming week. So what do we have next? I want to take you through the pound yen. I would like to start off at the weekly chart. At the weekly chart, you can see price is bullish, clearly bullish, has been bullish. Actually, this is not the type of trend I was telling you. You see, its angle is about 45 degrees and it has sustained for a while. But once you see a trend that is just parabolic, usually those ones don't last. But this one has lasted since 2020. The price has been bullish. Don't fight the order flow. It's bullish. Just be bullish. Yeah, and you can see, just zooming out into current price action, price did close above a swing point around 188 and price is holding above that swing point. And I probably see a continuation of this bullish movement to 196, and this is a multi-year high that was formed in 2015, and this is an area that I'll probably take a short here. You see, as price is touching that 196, I'll probably short it. It may work out, may not work out, but if it works out, it gives me such a nice R. So as I said, I see a continuation of that bullish move. So we are back to the daily chart. As you can see, we had a key swing point here around 188, 189 region, led to a sell-off. Price did test that and sold off, but did not see a major sell-off like the previous time. So this shows you that bulls are in control, and it eventually broke out. Price did retest, went up, is now retracing to that level. But as long as price is above that 188 region, I'm bullish. If we do see a close below 188, then I'll be bearish, but as of now, I'm bullish. And I'm going to take you through now the current price action plays that we are seeing. We saw the 188.23, or rather the 188 region hold, and we can see price is carving out a bullish move. Go to the H4, you can see bullish move, consolidated, bullish move. So if you're looking to trade intraday, probably look for a retracement towards this last recently broken high around 189.520, and you can target some of these major swings around. I usually like to target the bodies, not necessarily the wicks. See the bodies there, because around 191, which is also a key figure that price might react to. So that's probably how I would target the pound Japan come next week. Just probably look for a retracement over there. Look for a very safe stop loss and target 191, slightly below that body. By body, I mean if you look at this swing point here, the wick is here, which is the highest body close here. So you can target a level just below there. Because remember the concept of spread, yeah? The broker has to take out their spread. So you can always deduct your spread when you're deduct or add your spread when you are deciding on your stop loss and take profit. So that's a move I'll probably be looking come next week. But of course, as I said, next week is data heavy. And if you're trading cross pairs like the pound yen, you need to look out for movement in the pound USD, movement in the USD yen before you make a decision on how you'll trade such a cross pair. But so far, from a technical point of view, these are some of the trades that I'll be looking out for next week. Next up, we have the euro yen, highly correlated to the pound yen, and you can see the movements are all the same. I won't deep dive into the explanation, but it will be more of the same. Look for a retracement towards the recently broken high. If that holds, just target. You see, I did even put a rectangle. Target that region around 163.40. From a technical point of view, it makes sense, but as I said, next week is data heavy. So you can wait to see how the data prints before you take the trade. You don't have to be the first one in a trade. For me, but I don't trade reversals. I like targeting the middle of the move. It's way safer because at that point you have a lot of evidence supporting your move. Because my goal is to make money in the long run. I don't have to make the most money, but as long as it's money that makes sense to me, then my trading style makes sense. But so far from technicals, if you get a retracement towards 161 or rather actually I'll put it around 162. So your entry actually is confluence. Why? You see this region, and this is a H4. This region is a role reversal level, an RRL. We have this swing point, led to the sell-off. Price closed above. Price respected that level as support, went back, closed. We did see a retracement, went back, retracement again, sold off. Now I expect this level to act as new support for the coming week. So actually, I'd say the euro yen is giving me better confluence than the pound yen. And that's so when you're trading correlated pairs, based on the factors that you see on the chart, you can decide which trade I'm going to take. So I can decide to take both. And if I take both, I'll have to split my position size into two so that I maintain the same risk level in all trades. But if I'm to pick one, I have to pick one that has more confluences. And so far, it looks like the euro yen is giving me more confluences. Just the fact that these are all reversal level. And this swing point also coincides with the key figure around 162. I say big figure, it's a round figure. So yeah, so probably euro yen, probably see a move upwards targeting the 163.370. That is if the news supports such kind of move for the coming week. I'm going to skip the pound, the euro, dollar, because there isn't much going on in these pairs. and I'd like to look at USDN. I'd like to take you through a trade that I took last week. If you follow me closely, remember I've been targeting the 152. There's at some point when price was around 149.54, I had a bullish trade in. I had a long trade targeting of 152, but I closed it once I saw this breakdown. But I had made some good money on that because I started trading it around these levels, 146. But remember, price is king, yeah? You just follow what price gives you. If price tells you to close your position, just close your position. Don't hold on to a position. But it looks like the bulls are now back in control, and you might actually see a movement towards 150.81, the last swing point high, and probably even move towards 152. As I said, price usually moves from key swing point to key swing point, and I have a feeling at some point we will see a move towards 152 before we see a sell-off. But for now, I want to take you through a trade that I took during the week. So you can see this sell-off went all the way to around 146.47. Remember, support and resistance is a zone. Just because I've put a line here doesn't mean the price has to exactly hit that level. But you can see it came close to the level. So this is an role reversal level. Basically, role reversal level is where support becomes resistance and resistance becomes support. That's a key level because it shows it's been respected by both sides of the market. You can see here it was support, broke down, became resistance, came back, resistance, closed back above, became support, and price went back and we came back to that level. So it's highly that level will be respected by the market. I want you to see we had this sell-off, then we start seeing a breakdown of the sellers. Why? We see a lot of wicks. If you see a lot of wicks close to a level, it means that the order flow might be changing. So what do? You look at price to give him more evidence that price is switching. And what was my evidence? Look at these wicks. Look at the small body candles. Look at the low liquidity state. Then I want you to see the aggressiveness of bulls. Yeah. Look at the body of this bull candle compared to these other candles. So you have one bull candle that completely overshadows 1, 2, 3, 4, 5, 6. Basically, this entire price action has been overshadowed by one bull candle. And see price retested this small swing high and went back. So usually for me, evidence of change of structure is when price creates a new high, like we did here. Yeah, then that new high is broken. As I said, usually target the middle of the move, not necessarily the reversal. So my middle of the move was, see this candle there, there, because this was a new high, it was a zone. We closed. That was my evidence to go long. And what did I do? This is an intraday trade. I came to the H4. I saw the level, sorry, the H1, where I took this entry. I put my entry around that level. My stop was just below that level because I expected the level to hold. It was a very short trade. I just targeted the next area that had marked on my chart, which is that red line. And I made a, was it? No, it was 2 point something. And my stop loss was slightly bigger. So I made close to 2R on this trade. And it was a nice trade. Even if you look at for the price action flows on the H1, you can see quite an efficient move. So this was the last low that led to this low liquidity state. So at this point, I'm expecting price to continue lower. But what does that price do? It breaks above, breaks a swing point. Still, I'm not getting in. I want to see this new high. So how do you know it's a high? It's a new high because it has to lead to a low. High, low, then it breaks. The structure was not clean, so I gave price time to give me a clean structure. And once I saw this break above, I knew a price has to retrace before it continues going higher. And I love these rounded retests. You see, there's space after breakout, there's space. You see that black space before price comes. So that's a rounded retest. And it gave me some good R. But overall, I think price will get to 152 at some point. But for now, it's just to be waiting. I'll wait for the Bank of Japan interest rate decision and the Fed speaking on Wednesday, because that will heavily impact this particular price chart. It will cause this is news that is affecting the yen and the dollar. So also be careful when you're trading the pound yen and the euro yen, because they have yen, and the news will be heavy. I'm sure it will be heavy. So let us wait and see. But from a trading point of view, I think I'll be looking closely at the gold pair that I started with. Euro dollar, not much going on. Same to New Zealand and the Aussie. So these ones I'll skip for now. For the Swedes, we have important news that is coming out next week, but for now, it's actually ranging. So how we play out, depending on because we have the rate decision that is coming out by the SNB, so it will be important. If we break below this range, I'll be bearish. If we close above this range, I'll be bullish. Simple as that. Just reacting to what price is giving you. But for now, it's just a wait and see. For the Kenyans, do you really believe these movies is is driven by fundamentals? Yeah, we did see the Kenya shilling gain against the dollar. I think right now we are among the best performing currencies in the world. We gained 15.2% against the dollar. We can see, aren't you to see the steady rise of the dollar across the years, yeah? Look at this dollar. Rise became parabolic. We did see the government pay the Eurobond, increasing investor confidence in the Kenya shilling. We saw the central bank sorting out the liquidity crunch, the dollar liquidity crunch in the country. We have seen a resumption of the interbank market, probably some of the fundamentals that were driving this move. But in my years in trading, I've never seen a currency gain this much in a span of very few weeks, or rather few days, and it still continue to gain. So I think this is artificial, and anything that is artificial, of course, price will have to recover. And recovery is not immediate. It's not like tomorrow we'll wake up and see the dollar back to 163. It will take time. I think at some time Bloomberg had predicted that price will probably settle at 120 for a while. So probably if you're in Kenya, probably target to see price go to 120. That's my forecast. I agree probably with Bloomberg because I see a continuation of this down move now, given that the fundamentals are supporting a strong case. Yeah. Minus all this drama that happens, politics and whether the move is real or artificial. I think if you just look at pure fundamentals, they're supporting a stronger case. Probably see price go to 120. Our currency is controlled floating. So in as much as it's determined by supply and demand, the central bank still has a hand in the prices that we see being printed on this chart. So it'll be interesting to see how this plays out, especially for the Kenyan economy moving forward. The more the Kenya gains, the better for importers because you'll be getting dollars at a cheaper rate. And even from a pricing point of view, when you're pricing your goods in the market, it may help you increase your sales volume because from a hedging point of view, you'll not be transferring the FX cost to the end consumer. I think those will suffer slightly for in the services industry, especially tourism, who have gained immensely from a revenue point of view in the price appreciation of the dollar against the case. We might see some of their revenues go down. The volumes may be the same, but they may lose out on some of the FX gains that they were seeing. But for Kenyans, probably you could tell me in the comments, what do you think? Is this move artificial? Is it supply demand? Do you think it will last? Because it does continue going down. The dollar index, as I said in my previous videos, if you're trading the major pairs, the euro dollar, the pound dollar, the Aussie dollar, the New Zealand dollar, it's always important to check the DXY. Yeah, the DXY drives a lot of the currencies. It drives the euro dollar, the USD Swiss, and right now the DXY is bullish, so meaning the dollar is strong. Yeah, so it will be interesting to see how the other pairs play out, especially after the news releases. But I'm not going to deep dive into the DXY for now, given I've not talked to you through the euro dollar and pound dollar. Bitcoin, I've actually started trading crypto futures. Yeah, I used to do spot for a while, but I'm back. I've decided to give futures a try. So that's why we see the BTC charts here, but I'll not be deep diving into this. I think just before focusing on Forex, this is just more of a side thing. And more crypto, more crypto, more crypto. But that's it, traders. I hope you enjoyed this week's overview of the Forex market. I know I've been away for a while, but I'll try to be consistent with my postings. That's it for now. Enjoy your week. I will look out for the news. And most importantly, also subscribe to my channel. If you find the information that I put out is helpful, subscribe, share, and invite your friends. And I wish you a fruitful week. Thank you.